What is up, traders? My name is Jason G with Responsible Day Trading, and this is your market weekly rundown. Today is Sunday 25th of September, and we're looking at the E-mini S&P Futures. Sunday evening here in the UK. Just opened up my charts, doing a bit of a market review to see how it looks for the coming week, help us set some expectations, see what news we have coming. It's going to be a type of market environment that's going to be really tradable or very volatile. So let's start, as we always do, with checking out the news. So if you don't know already, come to responsibledaytrading.com. We have a live calendar here. Go to news, market news, and then you can use the filters to filter what kind of news you're looking for. But we are obviously trading the S&P 500, so we're interested in mainly the US news for the week. I'll put those dates in there, so just for this week, and I've selected just the highest volatility news events. If you're looking at moderate and low volatility, there will be a lot of news events there, but it's really the high volatility ones that are going to have a big impact on the market. So we want to be aware of those. And if you're not someone that trades the news, then obviously you want to be looking at these times and understanding when you should be stepping out the market and waiting for things to calm down before you get back into it. Maybe 15 minutes, 30 minutes on average before a big news event. Depends what it is really. So quite a bit of news coming up this week. Tuesday, September 27th, we have Fed Chair. That's always a market mover, and several other big news events, consumer confidence as well. So they're starting mostly pre-regular market trading session, the big news. So I expect the pre-market to be quite volatile. If it's not, maybe on the open, and then just after the open, we've got a couple of other news events here that will be going on. The following day, so pretty much every day of the week, we've got some significant news. Wednesday, again, another potentially volatile day for the markets with Fed Chair and crude oil inventories, which is always a market mover. Then we have GDP and jobless claims on Thursday, and the core PCE price index on Friday. So just be aware of those events. Check out the calendar, maybe set an alarm so that you're aware that it's incoming on the trading session. Okay, so we're going to start our market analysis with the daily charts, the way we always do. Top-down approach, looking at the highest time frame. We are on the 1222 E-mini S&P Futures contract here, so I'm just going to expand this so we can get an idea of what's going on. So I'm trading tick charts here, as we do at Responsible Day Trading. Each one of these bars represents one day in the market. The little black dot there is the actual close of the day, with the highs and the lows in the bar itself. So right now, where are we? Let's have a quick look. So for the last two weeks, I would say we've been in this big move to the downside, but overall since the beginning of the year, it's just been a big sell-off with some large retracements in the market, but generally we're continuing to move to the downside. We had that really big deep retracement here about a month or so ago, and then we just continued to the downside. We actually broke out of this it was kind of a dynamic support zone, appeared to look like a bit of a wedge, some compression going on in the MACDs. We bounced off of it and then just broke straight through. So I'm going to just clear this one out of the way so you can have a look at the MACDs, what's happening with current price action. So we've moved down to this area where we were close to it before we bounced off of it. So that was a sort of key support area. So if we look to the hard left here, you can see where we are, around 37.1150. If we move there, you can see that previously we'd been in this zone, December 2021 or 2020, January 2021. It was an area of resistance turned into supports. We didn't really retest this area for all of that period of time. The beginning of January 2021, it's not until we got back over here in June, July, and now we've retested it, pushed a little bit lower, but we're still within that zone. You can see that I've marked out here, so it's pretty much a zone of support and resistance, and we're really looking to see if this is going to hold or not. If it's not going to hold, then the next zone below it is going to be here around 3,500. That's where I expect price to sort of push down to if it can't find some buyers in this area here, a significant amount of buyers to push the market back up again. If we take a look, a bit of a closer look at the MACDs, it's looking really strong to the downside, and even the bars, you can see big strong bars the last week pushing to the downside. We've got a bit of a double bottom there, so we'll pay attention to how it works out, but right now everything's saying down. EMAs are pointing to the downside, it's starting to widen out, and we do definitely have room to move further down. If we're looking at the price action, then maybe 3,500 as I pointed out over here, but if you're looking even at the MACDs, you know, we might expect to move somewhere like close to these areas here. So I've used the wrong marker there, but what I want to show you is these areas here, right? So we could retest that. We're practically there on this one, so we could move down and bounce, because the MACDs act in the same way in terms of support and resistance as price does. We do get bounces in the same area where the MACDs have visited. So let's keep an eye out for that. Yeah, BB's strong, good distance between the actual BBs themselves. We've got pretty strong color. It's starting to lighten up a bit, which shows a little bit of a slowdown in momentum or strength to that direction, but that's to be expected arriving at this area. What we would like to see, if we're talking about this area holding, is, you know, a sort of support pattern where we maybe do something like this, bounce a couple times here, and an actual accumulation zone here, and then we want to see the BB sort of pull into between the Bollinger Bands. So maybe do something like this, and then, you know, once we're inside, we can use that inner Bollinger Band as a bit of support, and then start to push to the outside, right? And that will possibly turn the direction of the market. But really, my expectations is, until, you know, I see a lot more convincing information, really, or convergence of information, then, you know, I'm still looking to the downside here. So let's have a look at the next lowest time frame that we like to look at. That's going to be the 10.946. So this 10.946 chart, what that's showing at the moment, and marked out here, so this is the last, let me just expand it a bit, make it a lot clearer for you. This is probably the last few days from last week. You can see it's practically starting around the 23rd, 24th of September. Yeah, so a few days ago. This makes up a couple of days of trading. You can see we start to put in some divergence right back on the 23rd, which would be Friday. So end of market close, pre-market price activity here. End of market close on Friday. Some of the pre-market price action started to show sort of running out of gas to the downside, and that's represented by, you know, the fact that we've got quite significant divergence on the MACDs here. So we're pushing up on the MACDs, making higher pivots on the MACDs, as you can see here. These are all lower pivots, as you can see over here. So that is what we call divergence. Now, sometimes you'll see divergence like that, and then usually what it's going to do is it's going to turn the market at some point. It's an indication that we're running out of gas, we're running out of steam to that direction. And the MACDs are, for me, a leading indicator on price. So they're going to tell me, you know, to be on the lookout, or to be aware that, you know, this does look strong and looks like it's continuing to the downside for the meantime. But it's not going to last forever. At some point it's going to turn, just because of this disagreement between the MACDs and price action. Now, when you've got a really strong trend to the downside, sometimes that divergence can be broken. So we've got all this divergence building up, and then price just, the MACDs start to get in sync with the price action and start to move down against the divergence there that it's set up, and that divergence fails and they get in line with the MACDs. Now that often, or with price rather, now that often happens against very strong trends. The trends are so strong they can break that divergence. But in this case that didn't happen. What we found was, this divergence has held and caused the price action to make this strong move to the upside, and it's continuing to show signs of continuing to the upside, right? So we're seeing some signals there. So let's just talk a little bit about the most recent price action here. You can see we made this big strong move to the upside. Okay, MACD's nice and strong to the upside, and then we had a couple pullbacks here, continuation pullback, and we just stayed on the inside of the Bollinger Bands, and we're using the inside of the Bollinger Bands as really a support. And if you notice these Bollinger Bands, these are the lines on the outside, they're starting to pinch together and get really tight, which is showing really signs of weakness in the direction that we're going, in the direction to the upside. But that does not mean that this is going to fail to the downside for sure. So it's really the way I interpret what I'm seeing here in terms of the MACDs. What can happen here is obviously a couple of scenarios, but it looks like a potential for a continuation to the upside, right? So the pinch here is really squeezing the BBs, and then if we break out, we will be moving significantly to the upside. We could equally roll over, as a terminology we use for the MACDs. Once they start to show a pattern of rolling and they start to roll over, and then we move to the downside. So we've got to keep a close eye on how those MACDs behave inside that Bollinger Band, and they start to break out, maybe find a little bit of support on the outside. Then we're going to be looking to move to the upside with the most recent price action I'm looking at here. So in terms of price action analysis, we also want to look at price itself and the structure of the market and the structure of price action on the charts here to see, where are the main areas to be moving to, where are the areas of previous resistance or support, where can we expect to see buyers and sellers stepping into the market, understanding things like where the liquidity is, where the different players are going to be in the market. So that's all important as well as the technical analysis. So you can also just look at, see this area that I've got above here, which is a really clearly defined support area. Price moved down to this zone here of about 37.65, 37.70, bounced off of it. Against a strong trend, found a lot of buyers push it straight up. The trend is really strong to the downside, bounced again, put in this wedge, this compression here, or this asymmetrical triangle, you can see, and we just bounced and bounced and bounced, made a push to the upside, couldn't quite get it through, and then big sell-off. Now, in terms of which areas we can move to currently, well, that's going to be obviously where we're looking at the next major area. So if we do continue to the upside, we would be looking at retesting this previous support area, and maybe that turning into a resistance zone and allowing us to continue with the overall direction of the trend to the downside. Or what might happen is we could just break straight through this area, make a bit of a complex breakthrough, we pull through, then find some more support and start to move to the upside. Now, if this area does hold, I would expect to really move down to this area, because it's a bit of a no man's land here. There's not much happening. We haven't bounced off of this area, we haven't really retested it previously, just moved straight through to this area below, right? So let me just mark this out. Now, even this area is not that significant. I would say the next significant area really for support would be around this zone here. So we can expect some reaction as we get down to here. But I think if we've got enough energy, enough strength to move down to here, we're probably going to keep going, and then and then maybe do something like this in the 37.15 to 37.20 zone. Right, these are more significant support areas than that one. Nothing really happening here. So with this scenario, if we do hold at the previous support area, I'd expect us to be quite quickly moving down to these areas here and finding some support. The other case is that we do move to the upside, right? So we break through this previous support area, put in some, or resistance rather, put in some support, and then again, not too much reason to be hanging around in this middle zone here. Where we need to get to really is a significant area of resistance. That would be this zone I've just marked out here. One of the reasons for it is because of all the liquidity that is going to be up there. So there'll be a lot of stop positions just tucked in behind here and here. That's where the liquidity is. That's how institutional traders ensure they get filled without any slippage, by hunting down those sell stops. If we think that overall the market is going to continue to the downside, I think we might see this sort of deeper retracement, much deeper retracement to the upside, at least to this area here, maybe pushing higher even up to the next area here of 38.40 before the coming days and weeks, especially with the news that we have, and then getting back into the trend to the downside. So just a complex deeper retracement that's going to give lots of opportunities for long side scalp traders to get in there and make some profits, and then once you get a sort of deep retracement, maybe looking at taking out sell positions to sell off and continue back in the overall direction of the trend. Just reminding you, looking at the daily chart here, that it's a big trend to the downside. So we're just looking at maybe a sort of complex retracement like this over here to this next level. That's the level I've been talking about. Okay, so that's 10.946. Just keep an eye out what happens during close to market open and the pre-market, where there's a couple of big news events, and see how it plays out. Definitely don't get caught up in the volatility of the news events. Sometimes it's worth just standing by and watching the market before it calms down and gives you a really good opportunity to get involved. So let's just take a quick look at, Sunday, so we don't have any real decent price action going on here at the moment, practically none. So the 1597 chart, so let's have a quick look at what's going on here. So you can see that we've had this sort of compression of the MACDs, looking very similar to a wedge, and we've been putting in these lower highs on the pivots, so lots of divergence on the MACDs, high highs here. This is a classic wedge formation or symmetrical triangle, but what's happening here with the lower highs is directly against what's happening on the price action, which is putting in higher highs all the way up. And it's a similar thing to what we were talking about on some of the other charts, right, on the 10.946, even the daily, that eventually what's usually going to happen is that price is going to get back in line with the MACDs. So this divergence can only go on for so long. So let's see how long it can go on for. We have got a significant retracement divergence right now, which is gold. So if you look at the distance of this pullback, if I take a measurement for you, actually, let me just clear that arrow, and I'll explain to you what I mean by retracement divergence if you've not heard of that before. So if I use a Fibonacci retracement tool here to show you the distance of that retracement. Okay, so this is the move down. The retracement is practically 100%. It's, as you can see, it's easy to see from the price action. Actually, it's about 95%. But if we use the same tool to measure the actual retracement from, let's mark out this pivot here, so we get an accurate pivot on the MACDs, and then if we just use our tool here, I'm forgetting the shortcut F8, right, yeah, we mark that one out. You can see that we're somewhere there in a 61% retracement on the MACDs versus 95% on the price action. So that's classic retracement divergence, and it's a really good indication that there's a short selling, in this case a short selling opportunity, that this price can't continue. It's too much work for the MACDs to do to catch up with price. It's possible if the trend is really strong. It's quite strong. I wouldn't say it's, you know, it's going against the overall trend, so it looks like a deeper retracement. It looks limited at this point in time, you know, and obviously talking about the 10946, we have identified areas above to keep an eye out for, but in terms of a trading time frame of 1597 in the next coming hours or pre-market, you know, I can see the opportunity to move down and retest this area here, given what we're seeing on the MACDs. We might even see, you know, the BBs making their way all the way down to this kind of zone here, which was acting as a dynamic support zone and bouncing off of there. If that doesn't happen, I mean, right now the BBs have rolled onto the inside of the Bollinger Bands. It's not beyond the realms of possibility that the BBs don't start to head to the outside. In that case, you know, we can expect maybe we find some support there, and maybe we push on to the other side here. So that's what we're looking out for, those type of things, really building up the narrative by looking at the higher time frames right down to the macro detail of the BBs to help us make trading decisions. So guys, that's it from me. I'm Jason G with Responsible Day Trading. Hopefully you found this video really informative and helpful, and it helps set your expectations for the S&P futures this coming week. Don't forget to subscribe, like and hit that bell if you want to see more videos like this, and let us know in the comments section what you think about price action and the technical analysis I've done. Do you think it's likely that we're going to hold at this area here on the daily chart I'm looking at right now, or you think there's more to the downside? Do you think we have more room to run to the downside? When I scale it in like this, you know, it does look like, you know, we definitely have more significant areas below. What do you think of the current market environment? How are you finding trading at the moment? Are you managing volatility well? I'd like to hear how you guys are doing in the S&P futures at the moment. So if you feel like it, go ahead and make a comment. Yeah, and if you want to connect with us, you can find us on all social media and at the Responsible Day Trading website, www.responsibledaytrading.com. That's it from me. Have a great week's trading and see you on the other side. Take care.